we've got the highest US annual inflation released yesterday on May 12th. Now, that release confirmed that oil shock is feeding into the inflation. How did it affect the sentiment? Let's get into it. Hello, everyone. This is Andrew Market Prep, and we are almost 2 hours into London session. Let's look at what's going on with the sentiment today. So we can see one of the first things we should look at is oil. Here you can see the line chart. And what first comes to mind is that we are holding above $100 price, which is quite concerning sentiment-wise. And this alone may tell us that this is sort of a risk-off sentiment that brings some concerns, brings some fears into the market. Now, if we look at this upper chart, the candle chart is the DXY, the dollar index, and it's going up since has been going up since the closure of Tokyo today. Okay, and yesterday it also popped higher on CPI beat, and the inflation beat happened across the board, the core inflation and the headline inflation, which means it's not just because there was some kind of like a random spike in food or energy prices. So the price increases across the board. There are some fundamental basis for that. And we know that's obviously because of the conflict with Iran. So what it tells markets is that the inflation, the heightened inflation is going to stay. And that brings concerns that Federal Reserve will not think about cutting rates, which supports the dollar strength in the medium term. So that's why we can see since yesterday, the dollar has been strong and it's approaching this key resistance area around 98.5 to 98.6. Okay, if we manage to break above, then you can see how it dropped here without much of pauses. So if we manage to break above this blue resistance area, there are pretty good chances that after some sort of consolidation, we may continue going all the way up to 99.10. And that means the strength of the dollar across the board against majors, and that means weakness for equities. Talking about equities, you can see on the right side these colorful charts that include Tokyo, China. You can see the Tokyo chart is the red one, and we are dropping almost break even the Tokyo one, and China is quite sluggish. Hong Kong is down, Dow down, and what's happening now is actually DAX is down, although FTSE is still holding up, but the trend is down for the last couple of hours. So Europe thinks that CPI print yesterday is bad for equities. That's why equities are selling off, and the dollar is strong. And we can see in this down right window that the indices of currencies, this chart shows currency indices, we can see that the dollar is almost the strongest. There's also Aussie, Australian dollar, though, which I will touch in a moment. But also yen, Japanese yen is strong. Canadian dollar is strong. I guess mainly due to the strength in oil. As we know, Canada is an oil producer, and Canadian dollar is highly correlated with dollar movement. So other risk-on currencies like pound, euro, and NZD are weak today, and which is quite logical considering strength in oil and dollar weakness in indices. That's risk of sentiment. I wouldn't say we are in a panic mode, though, but this is a sensitive market state. Okay. If there's any particular negative trigger, we can move down pretty quickly. I mean, in terms of equities and commodity currencies and other risk-on currencies like pound or euro. Okay, so let's get to the actual instruments. Let's talk about Aussie. Why did it actually pop higher and has been strong today? Now, it's interesting that Australian dollar doesn't look anyhow strong against the dollar, against the US dollar. You can see from the chart, yes, it grew into US closing, into New York closing, and today it's holding in kind of tight range. However, if you compare this with Kiwi, it's just selling off. It's just selling off. It's reacting to CPI beat, which is pretty expected. But Australian dollar is holding up well. And to see it even more vividly, let's look at a pair that doesn't involve USD. Australian dollar versus Swiss dollar. So here, this is a crazy breakout where I'm actually waiting for a pullback towards 0.338 Fibonacci level of this move. And I want to consider going long as we make a pullback and start recovering here. Now, this chart shows that there's clearly a relative strength in Australian dollar. Why? And that's because just today there were news from Australian government that the 26-27 budget in Australia was projected to have modestly smaller deficits. So it seems like it calmed down the markets and removed any restraints from buying Australian dollar, which makes sense because currently Australian dollar is probably the most hawkish currency, which means its central bank, RBA, has the most hawkish stance. So they are pro hiking rates. They want to contain inflation. And in their forward guidance, they sound the most decisive in doing that due to concerns around the heightened inflation. Plus, Swiss dollar is the most dovish central bank out there right now. So that's why I'm looking at this pair. Now, I guess going into the New York opening, we're gonna see some sort of pullback here, where I would look for a possible entry in the first 2 hours of US session, maybe even during US lunch. We'll see. Now let's look at another pair. I was looking closely at dollar CAD going into inflation release yesterday. And let's switch to 1 hour chart. When the inflation came out at around 7 p.m. Jakarta time, when inflation came out, let's see the intraday chart around here. So we had initial pop higher, then sharp pullback, and then going into New York, we recovered quite decisively, and during New York session, we saw some attempts to go higher. So, of course, that was driven by inflation bit. Why it couldn't sustain that move, though, is that because we already saw quite sustained move into this CPI release. So the market was pretty overbought. And some people were just using this short-term demand to actually get out of their buy positions from earlier. So when we see this kind of sustained move that's going into the release, and then the release confirms the direction of this move, probably it's already quite late. And there is a saying in the market, buy the rumor, sell the fact. So probably the market was already pricing in the heightened inflation. And when inflation came out, the market is pricing it out. So now we are pricing it out. We are actually taking profits from these move higher. So the way I see it, if we still want to trade, if we want to trade the heightened inflation, I would want to wait for some pullback again, because this move is quite steep, I would say, even though there are some pullbacks, but I think we should have some sort of consolidation or a pullback here before we actually can break above this area reliably. Furthermore, you can see on the daily chart around 1.3725, which is a round price, by the way. A round price, psychologically more significant than a random price. Around this price, there is a 50-day moving average, which could be sort of a resistance area for the market. So I would want to see some consolidation here, and then breaking above this level, this area of 37.25. Okay, so another asset I would like to show you is silver. And silver acted very decisively, I would say, starting from May 11. There was a consolidation prior. I wasn't here. I didn't take it. And we broke above this medium-term resistance area about around 83. Okay. Now we are consolidating above this level, which is a sign of strength for this metal. So furthermore, we are consolidating below 87 here. Another price action signal is that into Tokyo session, we retested lows here. You can see this candle with a long wick. We retested lows, probably took out some short-term traders, which means they sold their buy trades, and probably here around 86 there are big limit orders that are holding the price around this area. And as I'm talking, we see that the price is trying to approach level 87. I'm interested in going long if it breaks, if at least an hourly candle breaks above 87 and closes here. You see, I have an alert around 87.25, and also I would be interested in buying down here if the market decides to retest this low again, something like this. If we retest this low, recover higher, I would also be interested in buying silver. Now, fundamentally speaking, why is silver strong? Well, initially, when inflation came out yesterday, intraday, we can see that, where is it? We can see that the silver went higher and then sold off. So the growth wasn't one directional, because from one side, higher inflation means hawkish bets, which strengthens dollar and puts pressure on anything that's quoted in dollar. From the other side, though, inflation means pressure on real yields. And when there is a pressure on real yields, precious metals benefit from that. And it looks like markets bought into the narrative of inflation threatening real yields. That's why the silver got stronger here. And I believe from now on, investors would be favoring silver, not gold. And if we look at the ratio of gold-silver ratio, okay, we are in a quite definite downtrend here. And we broke below and retested this level of 55.5, 56, and we are heading down. So in the medium term, we can expect silver weakness in silver. That's why it makes sense to prefer silver over other precious metals now, especially gold. So that's it for today. I've got 3 ideas: Aussie Swiss, silver, and dollar CAD. Dollar CAD might take some time to mature, but Aussie Swiss is pretty ready as of now. I'm just looking for some sort of pullback to get a better entry. And also, silver is breaking above. I'll see what we can do here. Probably I would prefer buying it around New York opening, but we'll see how it holds here. Okay, so that's it for now, and see you in the next entry market prep. Bye.